Makwe, good evening.
Evening.
Well, I suppose, the trade tension is really making the month of May a difficult one, not just for local markets, but for international markets. You can recall at one point not so long ago, we were over 58,000, not the case anymore, and this is the international scene, isn't it?
By all means, and to think that even for the whole of last year, this whole thing about the US and China, It has been one of the major headwinds, But later we saw the markets going up, all at the back of we were hopeful that they're going to resolve the issues. And yes, some other things also contributed for the markets to go up, like the US not continuing to increase interest rates, stuff like that. But I think the major one, it was people who were hopeful that yes, they're going to reach a settlement. And I think maybe one has to brace themselves that this might turn out to be another Brexit kind of a thing, where you think you've got a deal, then all of a sudden there's nothing and it gets to be prolonged. And I think if also you check the comments that came out of the Chinese president, it tells you that we might be in this whole thing for a long haul. For them to say that we are starting the long march, basically all is saying that it's a new start and we have just to wait and see what's going to happen. Though he didn't mention the trade war or the US, but all the interpretation was it's still going to take a long time before this whole thing could be resolved or for the Chinese to cave in.
I want to talk about the local stocks. Now, Rhodes Foods, 2.1% increase in earnings. A very different picture from what Pioneer told us yesterday, and they were actually quite adamant that they just couldn't transfer those higher costs to consumers, and that's one of the reasons why that performance was so poor. But what do you think of Rhodes Foods? I see the share price up 4.2% today.
Yeah, and I think, it's just a small increase, going up by 2.1. But I think we all understand that, yes, margins are under pressure because of the quality of what they've been selling overseas, so hence prices were low. And also the food inflation was not doing okay. So, and they also had some once-off expenses, They had to make sure that they relocate some of their vegetation. They have to make sure that they're going to improve on some of their warehouses. And safely, most of the capital expenditure has been done. So hence, the company itself is happy that going forward, they should be doing okay, meaning the second half should look much better as compared to the likes of Pioneer, which had a slump of almost 14% when it comes to the headline earnings per share. And the problem is now to pass over those increases to consumers is difficult because South African consumer already struggling as compared to someone who's at the producer level. Hence, you see, even when you look at the PPI and the CPI, it's easy for producers to pass over the expenses to the retailers. But for the retailer to pass over to the consumer, it's not that easy. So hence, we've seen that happening with the likes of Pioneer. But if you have to compare likes for likes, Pioneer, the market cap of that company is almost 16 compared to Rhodes, which is almost 4, and also their dividend yield. I think Pioneer is paying a better dividend at almost 4.9 as a dividend yield compared to the 1.25 offered by the likes of Rhodes.
No, that's a sizable difference. You were talking about inflation. Let's talk about food inflation. It's been pretty much benign for months now. Inflation itself overall expected to be around that 4.5%. Those numbers come out tomorrow, and then of course on Thursday we have that interest rate announcement. What's your forecast?
Yeah, we still expect that it will still be around 4.5,
Yep.
And mainly because I think most of the things have been factored in, your likes of petrol price increases, stuff like that, and the rand has not been doing that badly, so we hope that it will still remain there. And it's so because that's the inflation expectation that the Reserve Bank will like to see, that it gets to be anchored around 4.5 going forward, so that will be more or less a safe haven. And remember, the target is anything between 3 and 6%. Same applies to interest rates. I don't think the guys have got any reasons to move interest rates either way. They just have to hold for now, given that our economy is not doing okay and we don't have any things to worry about to say that they might be behind the curve. They have to start moving now. So we think he will hold rates.
Just a few seconds before you go, Makwe. So we've got the cabinet getting together here locally. So a lot of political events coming up in the next few days. What do you think is the local currency's reaction to this? We haven't seen any domestic driver to the rand for some time now.
I think the local currency already expect that Cyril will come with a cabinet that will be approved by the markets because everyone has made it clear that we need capable people.
Makwe, thanks very much indeed. That's Makwe Masilela there from Makwe Fund Managers.